Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Craig Martin. Craig is a certified financial planner, and he's, I believe, president? The Family Wealth Consulting Group is his company. And a fee-only financial planner, providing asset management services for some 30 years. And he's the author of a book, Craig Martin on Asset Class Investing. And I'll bet if you get in touch with Craig, he would be glad to send you a copy of that. And it's pretty good reading. So anyway, welcome, Craig.
Thank you
for
Mike.
Joining me today.
Thank you, Mike.
Good to have you.
I'm glad to be here. You put on a wonderful series of shows to educate the public about finances. I'm very, very proud to be a part of that.
Oh, well, I'm glad to have you as part of it. Okay, well today Craig and I are going to be talking about the role of the fee-only financial planner. And so he's well qualified to do that since that is his business. And he can also, though, maybe share a little insight about what your alternatives are and so forth. So Craig, what is the difference between a fee-only financial planner, or CFP, compared to a stockbroker or a fee-based investment advisor?
Good question, Mike. The public's looking for the best counsel and advice out there. They want to know where they can get the best information. Mm-hmm. And a fee-only advisor, in my opinion, offers that kind of advice and counsel. Mm-hmm. So I got started in the commission business. I gave up the license to sell that commission business, and now I'm just a fiduciary. So the difference is that if I have a license to sell a commissionable product, mm-hmm. I cannot act as a fiduciary for my clients. I have a different standard of responsibility called suitability. Mm-hmm. The RIA, Registered Investment Advisor, does not have a license to sell a commissionable security, and under the 1940 Act of the U.S. government, in the U.S.
Okay.
Under the 1940 Act, the RIA is by law a fiduciary.
Okay.
So when I gave up my license to sell commissionable securities, I became a fiduciary. I was registered as a registered investment advisor, and the public can find registered investment advisors by Googling RIA, Registered Investment Advisor.
Now, when you say a fiduciary, so a fiduciary, like in the legal sense that we usually think of, is like as a trustee or an executor. Mm-hmm. In this case, though, it's a little bit different sense, isn't it? It's sort of like your obligation is to look out first for the client? Or?
Yes, it's the same standard, actually.
Okay.
There is no legal definition of fiduciary. The closest it comes to is under ERISA, who governs the 401k qualified plan marketplace.
Yes.
That ERISA guideline takes a stab at identifying what a fiduciary is.
Yes.
In analyzing a qualified plan. In the trustee world, there are many laws, rulings in court that have determined what those responsibilities are. Primarily, a fiduciary must be acting on behalf of the client. Mm-hmm. That means they need to be transparent. Mm-hmm. Everything's up front. There are no secrets. There are no secret handshakes under the table deals. All the fees and costs must be listed. Yes. Every decision needs to be made with for the best benefit of the client.
So
Any conflicts of interest need to be noted also. I almost forgot that.
Yeah. So, and I think that's sort of a key. Is, in other words, like there's no kickback that can be going on here. It's that any fee that you have is just the fee you're collecting from your client. You're not getting additional income on the side from the people whose investments that you're actually placing and so forth.
Yes. So a fiduciary, when you're working with a fiduciary, you're advised and reported in print on all of the costs involved in your investment program. Mm-hmm. In contrast to working with a broker with a typical Wall Street firm, the best you'll understand is the commission that's paid. Mm-hmm. but any other payments are unknown and probably unlisted. So when people come in my door to hire me, they bring in their portfolio for me to review. And when I ask them how much they're paying currently to their broker, none of them know. The worst case is that even as a professional, I can't tell them what they're paying. I know a lot more of the fees that they're paying, fees and costs that they're paying, than they do, but I still don't know them all. If you look at the big wirehouse structure, it means that they need to bring in about 3% a year on every dollar under management. So if you have an account being managed by a major wirehouse firm, then you're probably paying close to 3%.
Okay. Now, there's also a situation, isn't there, that some investments pay higher commissions than others, which could create a conflict of interest right there as far as which ones are recommended. So, for example, for placing maybe a limited partnership interest as opposed to a widely traded stock and so forth, it seems like that can create a situation of an incentive, and that's the whole purpose of it, of course, is to create the incentive for the broker to place that investment with their client.
Yes. When I was selling commissionable products, I found that when given a choice, I'd sell the highest commission product.
Golly, I can understand that.
And what I discovered was that wasn't in the best interest in my client, and chose to get out of that business. It doesn't mean that the broker has bad incentives or bad intentions, or even that kind of structure should be changed. It's just that if the investing public wants to hire somebody that's on their side of the table, working for them, paid by them, not by the big corporation. So if as a fiduciary, my clients pay me. When I was a broker, the big wirehouse paid me. And I'd prefer to be paid by the client. Much better relationship for me, and my clients are very positive about that relationship also.
Okay. Why is using an advisor better than doing it yourself?
Yeah. Well, if the popular press could make you believe that you could do this yourself, it's my observation that the investing public can't know it all. I've been in the business for 30 plus years. I have a Master of Science of Financial Services degree. It's a master's degree in financial planning. I have many undergraduate degrees, CFP and others, and 30 years of working with clients and helping them with their portfolios. And there is an immense body of knowledge that I do not know. To imagine that any one person could know it all would be an unrealistic expectation. But to think that any one investor could make their own choices and do better than a professional, I haven't found that to be true. When clients come to me, when prospects come to me to hire me, they bring in their investment portfolio, and we talk about what they've been doing in their investments in the current portfolio as well as previous portfolios, and they are telling me many stories about how many mistakes they've made, and they know their mistakes now.
And one of the things that we talked about is that the average investor just doesn't tend to make the same sort of returns as they make, because doesn't the advisor or fee-only financial planner, basically a big part of what their role is to keep the person on course, isn't that right?
Yes. So